Hey guys, welcome back to the channel. Hope you're all doing fantastic today. My name is Bidie, and today I want to talk about 3 reasons Bitcoin price could be on the verge of an uptrend. Yesterday, Ethereum miners received 60% more fees than Bitcoin miners. Why Nasdaq setting a new all-time could be the boost Bitcoin needs. Cardano accumulation reaches all-time high as Shelly launch nears. First mover as Bitcoiners eye inflation boost, Wall Street sees barely any for 5 years. This is Techciety. If you're enjoying the content, don't forget to like and subscribe, and do turn on the bell notifications icon to find out when I post so you don't miss out. 3 reasons Bitcoin price could be on the verge of a new uptrend. Bitcoin price may be gearing up for a short-term rally as miners sell less Bitcoin than they mine on a daily basis. The price of Bitcoin has risen 170% in the last 3 months from $3,600 to $9,700. Despite the immense 3-month recovery, a series of fundamental factors point to the possibility of another uptrend in the near term. 3 reasons that they see that Bitcoin is likely to see this upsurge is increasing exchange outflow, miner revenue finding support, and the rising number of so-called hodlers or investors that hold Bitcoin for prolonged periods. They see a lot of people understanding the value of Bitcoin, where it could go in the future, what it's done in the past, and they say, you know what, I need to hold my Bitcoin as long as possible, and I don't have any intention of selling. They don't want to miss the boat. They don't want to be left with bags, obviously, but also they see a lot of what's happening in the world and the need for Bitcoin, and with centralized exchanges or with centralized areas holding money, their money especially, they don't have control over. But with decentralized exchanges, they don't have to worry about losing their money. They don't have to worry about someone holding their funds. They have total control over it. There's all the transparency, everything that's related to Bitcoin, or rather blockchain essentials, is very important for people. We've seen the Hong Kong protests. We've seen a lot of the protests of Black Lives Matter here in the US, and they're saying, you know what, this is something that we really need to protect ourselves from because this is getting out of hand. It's time to stop. So the article goes on to say that when the outflow of Bitcoin from exchanges increases, it suggests investors are preparing to hold Bitcoin for the long term. Typically, exchange users withdraw Bitcoin with the intent of sending the Bitcoin to a personal wallet, and this trend often indicates that users have less appetite to trade Bitcoin in the foreseeable future. So exactly what I was saying, they want to have it in their own personal wallet. They're not going to be trading Bitcoin anytime now. It's more about, hey, I want to have it and I want to hold it, and I'm not going to do anything for it for a while. The decline in Bitcoin exchange outflow coincides with a recovery in miner revenue. As miners generate more Bitcoin through mining in the aftermath of the latest hash rate difficulty adjustment, existing miners are becoming more profitable. If the operational cost to mine Bitcoin decreases, the need to sell more Bitcoin in the short term for major mining centers could also decrease. There is also a possibility that the outflow of Bitcoin is partially coming from miners. So to sum it up, they're saying that miners have been moving less Bitcoin and applying less selling pressure on the spot price. The combination of fewer sellers in the Bitcoin market and a consistent increase in long-term hodlers raises the likelihood of a continued rally. There's one variable that may spoil the uptrend, and it says that in the near term is primarily based on the assumption that miners will not sell much Bitcoin in the coming months, but sharp shifts in Bitcoin price and the difficulty to mine Bitcoin could quickly cause a trend change. And an ideal situation for a strong rally in the third quarter of 2020 would require that the price of Bitcoin remains stable above $10,000, and that amount of Bitcoin sold by miners on a daily basis continues to decline. So if this happens, it would signal that the price of Bitcoin broke out of multi-year resistance from growing confidence of both investors and miners, making a proper long-term bull market possible. if trends continue to go the way that they have been going, and we can definitely see this long-term bull market possible. You know, there's calls that are going out for Bitcoin to reach 150K in 3 years. Bitcoin could be 300K in 5 years. People are also looking for Bitcoin to one day see $1 million. I mean, these are fantastic numbers. Just to think about when just a few years ago it was under $1,000. It wasn't too long ago before that it was under $100, and before that it was under $1. This kind of explosive growth for Bitcoin, especially as any kind of exchange that isn't gold, stocks, or silver, it's kind of insane to think about that something like this has such value, and people understand its value. People are agreeing to saying that this is the way of the future. This is a very good way of exchanging assets. It only makes sense. So this next article says Ethereum miners receive 60% more fees than Bitcoin miners. The transaction fees have continued to spike as demand for smart contracts and ETH transfers have spiked. So the fees in aggregate for Ethereum miners brought in more transaction fees in aggregate than Bitcoin miners for the first time in months, according to blockchain analytics startup Glassnode. And a few reasons for these high transaction fees are the demand to send ETH between exchanges has increased as volatility has hit cryptocurrencies. Also, Ethereum-based Ponzi schemes are gaining popularity again, so be careful of that. As well as stablecoins have continued to see mass adoption by crypto traders. Analytics say that this trend of rapidly increasing transaction fees has a number of implications for Ethereum, of both positive and negative varieties. But overall, they say it's a bullish trend for Ethereum. They say that the increasing usage of the Ethereum network is a positive catalyst for the price of Ethereum. They note that the analysis has found that the price of ETH has been closely correlated with the transaction fees Ethereum users pay over the past 4 years. And if the historical relationship holds, ETH is poised to rally dozens of percent, a chart from Adam shows down below. Scaling solutions are coming, they say. So while they are essentially bullish for Ethereum prices and the narrative surrounding the blockchain, high fees do have the clear drawbacks. If one wants to interact with certain decentralized finance contracts such as MakerDAO and Uniswap, transactions can cost upwards of $1. With some operations, fees can quickly rack up to a handful of dollars. So according to Bitcoinist research, if one wants to interact with certain decentralized finance contracts such as MakerDAO and Uniswap, transactions can cost upwards of $1. With some operations, fees can quickly rack up to a handful of dollars, especially if you want the transaction processed quickly. This means that if you are a user attempting to trade or spend small amounts of ETH on DeFi contracts, you will spend a relatively large chunk on your holdings on fees alone. That's why there's been a push for scaling solutions. Currently, there is a gas limit of 10 million, though this could be increased by dozens of percent to accommodate more transactions. But there are second layer scaling solutions coming to the fray, which are attempting to enable extremely cheap, near instant and secure payments, like how the Lightning Network, works with Bitcoin. Why Nasdaq setting a new all-time high could be the boost Bitcoin needs. So they say Bitcoin price continues to fail to breach above 10,000 and hold. The last time the cryptocurrency held for consecutive daily closes above the key level was in February 2020 before the Black Thursday collapse. During that time, the Nasdaq Composite and other major stock indices set a record for a new all-time high. The past week, the Nasdaq set another new record, and it could be a sign that Bitcoin will finally break above 10 grand, hold, and finally set a new high. They say that the Nasdaq Composite NDX set new all-time high, and this is despite the widespread riots and protests and everything else that's been going on in the world. Major US stock indices like the Dow Jones Industrial Average, the S&P 500, and the Nasdaq Composite each saw massive rallies. Although the Dow and S&P 500 pushed higher towards higher highs in February, each index failed to set a new record. Meanwhile, the Nasdaq Composite Index and the Nasdaq 100 both achieved a higher high and new all-time price record. Investors are speculating as to if the continued growth in the face of economic disaster and record unemployment is due to stimulus efforts, a continued short squeeze, or if markets are just completely irrational. In my opinion, they are definitely completely irrational. We're basically humans that are deciding things based on our emotions with no logic whatsoever. We see something and we're fearful, and that's when we react. We see something and it could be positive, we react accordingly as well to that too. So to me, if markets are acting the way that they are and they're just completely irrational, that makes perfect sense to me. So they go on to say it's as if the Black Thursday panic sell-off and pandemic never even happened, according to the stock market. Bitcoin price has also seen a strong V-shaped recovery from the extreme low sets in mid-March. Just as Black Thursday decimated the stock market and precious metals, Bitcoin and the rest of the crypto asset class dropped by 50% or more. Some altcoins even flash crashed nearly to zero. They say that the drop kicked off the cryptocurrency's closest correlation with the stock market, and after that, Bitcoin has remained relatively correlated since. Most comparisons have been with the S&P 500, however. The cryptocurrency has demonstrated a recent correlation with tech stocks, which the NDX is filled with, to the way each daily candle has closed. The BTC USD, however, is lagging just behind these tech stocks, which could indicate that the leading crypto assets by market cap will also set a higher high soon, just as the Nasdaq and NDX have. And we can see from this chart right here, it pretty much has been correlated with the Nasdaq in terms of the trend going up from last year into the high of just about February, and then obviously dropping down to those events, as we all know, and then getting that momentum back to where we are now here in June. It's very, very similar to how the Nasdaq has been reacting. Cardano accumulation reaches all-time high as Shelley launch nears. So it seems like that Shelley is attracting more hodlers to Cardano. They are saying that these are exciting times indeed for Cardano, the self-acclaimed Ethereum killer, and the members of its ecosystem, as more and more hodlers are now buying ADA, or Cardano, the native altcoin of the Cardano blockchain, in anticipation of the official launch of Shelley, supposed to be happening in a few months from now. It will be recalled that earlier in May 2020, Charles Hoskinson, the co-founder of the Cardano Distributed Ledger Technology, DLT network, revealed the roadmap for Shelley and the assured Cardano enthusiasts that the Shelley era will officially go live before the end of August 2020, and since making that exciting revelation, people's interest in ADA has surged significantly. So they go on to say that for those who are unaware, the Shelley era represents the natural maturation of the Cardano network. It is the second of a total of 5 Cardano eras: Byron, Shelley, Gauguin, Basho, and Voltaire. Shelley is designed to make the Cardano blockchain 50 to 100 times more decentralized, enable ADA holders to stake their coins and earn decent interest, and to make it almost impossible for bad actors to orchestrate a 51% attack on the network. As reported by BTC Manager earlier in 2020, the Genesis block of the Shelley mainnet was mined successfully in a test environment, and the team has revealed that on June 9, 2020, the Shelley Friends and Family testnet will be open for the entire stake pool operator community to join. At the press time, ADA maintains its position at the 10th largest cryptocurrency in the world. The price of ADA sits at almost 9 cents with a market capitalization of $2.2 billion, as seen on CoinMarketCap. As Bitcoiners eye inflation boosts, Wall Street barely sees any for 5 years. And this article says that there is a disconnect between crypto markets and Wall Street. It goes on to say, among Bitcoin bulls, a key investment thesis is that trillions of dollars of money injections by global central banks will usher in an era of inflation, helping to send prices for Bitcoin, seen as a hedge against inflation, to the moon. Trading in global bond markets show that traditional investors expect nothing like the hyperinflation episodes witnessed in places like Zimbabwe and Venezuela. So just look at a break-even inflation rates, calculated by assessing the difference between yields on inflation-linked notes and regular bonds, It's a way of gauging traders' expectations for future inflation, and the current view is that consumer price increases over the next 5 years in the US will average levels well below the Federal Reserve's 2% target. They say as of Wednesday, the 5-year break-even rate was 1.5%. That's down from 1.8% in September. And this is even after the Fed injected more than $3 trillion of new money into the financial system just this year. And remember, the reason that they did this was to stimulate the economy, and they had to do this by printing money. So the analysis offers a reminder of just how deflationary recessions can be, with rising unemployment that often puts downward pressure on wages and consumers' demand for goods and services. A report Friday from the U.S. Labor Department put the May unemployment rate at 13%, up from 3.5% in December. Millions of people lost their jobs as businesses slashed their workforces. So typically, and they're also saying that Europe and other parts of the world are facing similar situations. While the European Central Bank ECB has amassed assets worth over 5 trillion euros, 5-year inflation expectations remain at a meager 1.02%, as noted by macro analyst Holger Zapitz. The ECB also targets a 2% inflation. So they wonder if this time could be different. They say that one possibility is that the Fed's new money injections haven't really found their way into Main Street commerce as much as Wall Street, propping up prices for financial assets like stocks and bonds. The Standard & Poor's 500 index of large U.S. stocks has rallied more than 40% from March lows and is about 8% short of challenging record highs seen in February. Other major equity indices, too, have witnessed stellar rallies. With few signs of rising inflation then and traditional financial markets rallying, big investors might have fewer reasons to pour money into a perceived inflation hedge like Bitcoin. So we can see right from here that the Bitcoin price indicator is about to turn bullish for the first time in 12 months. The 50 candle moving average on the 3-day chart is on track to cross above 100 candle moving average in the next 24 hours. The resulting bullish crossover would be the first since mid-June 2019 and the third since October 2015. Last year, Bitcoin's upward move from 4,000 to 9,000, seen in the 2.5 months in mid-June, accelerated following the same bull cross. Prices rose as high as 13.8 by the end of the month. Meanwhile, the crossover seen in 2015 of October marked the beginning of the mega bull run from $250 to $20,000. That's almost a $1,000 increase right there. Last year, Bitcoin's upward move from 4,000 to 9,000, seen in the 2.5 months to mid-June, accelerated following the same bull cross. Prices rose as high as 13,800 by the end of the month. Meanwhile, the crossover seen in October 2015 marked the beginning of the mega bull run from $250 to $20,000. As such, traders may take heart from the impending bull cross, even though it is based on moving averages and is a lagging indicator. Over other long-term MA-based indicators like the weekly MACD histogram and the daily chart golden crossover are also painting a bullish picture. However, they say, the cryptocurrency's recent failures around the 10 grand mark are indicative of buyer exhaustion. And that makes sense because a lot of people are saying, well, look, I can keep on buying and keep on buying, but if I don't see that return on investment, what is the point of me to continue to buy? So that perfectly makes sense, especially when they have bills to pay, they have other things that are on their mind on the short term. They're not really looking too much on the long term as that hedge. So it goes on to say, technical analysis comments that until the buyers reclaim 10,500 of the February high resistance as a new support, we would not only not see 11,600, 12,000 supply area being tested, but also Bitcoin remains at a risk of validating bearish rising wedge patterns with target around the 7,600s. So while the 10,500 is a level to beat for the bulls, last Thursday's low of 9,135 is a key support to defend. If breached, Bitcoin may see a deeper decline toward 8,600. And at the time of this article, Bitcoin is trading largely unchanged on the day near 97.45, having recovered from the lows below 9,400 over the weekend. That's gonna do it for me for today. I hope you enjoyed the latest happenings in the crypto space. Don't forget to leave a comment to keep the conversation going. My name is Bidier, and until next time, stay bullish.